On Business Incorporated today. Egypt's inflation quickens to 14.6% in August. South Africa's business confidence drops to 39 points in the third quarter of 2022. And Malawi seeks to raise $50 million to deal with fuel crisis. Good afternoon. Welcome to Business Incorporated here on Channels Television. I'm Ini John McQuarrie. Let's start off as usual, as we normally do with market numbers in Africa. We see that Nigeria is a lone loser, still continuing in that negative sentiment that is sustained for 3 days now. There you have the number. It's 0.08% down, even more, almost what it closed with yesterday. Yesterday it's closed with 0.09% down at 49,594. Looks very hard to get to that 50,000. South Africa is in a positive today. It's almost 0.5%, 0.4% at 66,982.28. And we see in other parts of the continent, if we'll see Egypt there, then we would see that it's a flip on the other side, and elsewhere on the continent, it's a bigger win for Egypt's EJX 30, and it went up nearly 0.5%. However, Kenya closed in a deeper red on yesterday. We go to the Middle East, where it's all mixed sentiment for major markets there. In the UAE, Abu Dhabi reversed its loss to gain to 1% at intraday, while Dubai index fell 0.21%. Still within the region, Saudi Arabia was down 0.72%, while Qatar edged higher by 0.41%. Let's go to Europe now and see what's happening there with the energy crisis there. The European Union looks to intervene on energy markets to help companies struggling to get their hands on enough liquidity. It's an unprecedented move as energy companies and consumers alike struggle with the high price of energy after Russia reduced its supply to the bloc. And of course, by now you know that's a threat that it might go totally off. Well, we have Christy Platson now joining us from Berlin to give us details. Hi, Christy. Good afternoon. So what's EU's plan here?
Well, the EU power industry had asked governments to provide emergency credit to help utilities companies meet soaring collateral needs. So what are collateral needs? Utilities companies, they sell some of their power in advance to secure a certain price, but that means posting a cash deposit with exchanges in case these companies default before that power is produced. This is normally not an issue, but the volatility of gas prices we've been seeing in recent months has increased risk there, and banks and brokers are now demanding higher margins on these payments. So now some struggling companies are struggling to come up with the cash, and they say that without government support, they will in fact go into default. Now some suppliers have sought state guarantees to cover these increased costs, and indeed the European Commission President Ursula von der Leyen, she wants to make it possible for EU countries to provide these guarantees more rapidly.
Is also considering limiting excess revenues from fossil fuel companies. A bit of a mixed message there. Are the companies struggling or are they not?
Well, it really depends on which company you're talking about and what you mean by energy companies. We were just now talking about utilities companies. So the company that delivers gas and electricity to your home or business, keeping your lights on. These are clients, of course, of energy suppliers. And there we're talking about companies working in oil, gas, the coal sector, also in renewables. But in terms of this idea to tax excess revenues, the bloc is talking about fossil fuel companies. Now, the plan in consideration, it would introduce a levy on fossil fuel producers' pre-tax profits, and it would limit excess revenues of companies producing power from sources other than the gas. So the idea there is to rechannel some of the profits from these companies to help support consumers with the high cost of energy right now.
So what's all this doing to energy stocks in the market?
Well, shares in some of Europe's biggest power producers rose after the news came out, and a Credit Suisse analyst said that it's because these moves on fossil fuel company profits aren't enough to discourage future investment in non-gas producing technologies just yet. But really the major market mover today, however, has been the European Central Bank, which analysts have been saying is likely to go for another significant interest rate hike at its meeting. Germany's DAX index fell back to 12,918.8 points in the morning after briefly jumping above 13,000 points, and the Euro Stoxx 50 was 0.2% higher. As a reminder, Eurozone inflation hit 9.1% in August, which is the highest since the introduction of the euro.
All right, Christy Parson, thank you so much for that details. Let's go to the UK now, where Juliana is standing by. I don't think we can talk about energy bills enough. That's the biggest story in the UK now and in the EU generally. Hi, Juliana. Well, when we spoke this morning, we were expecting the details of that energy package by the new Prime Minister. I'm sure you have that now. What are we expecting? What should we hope to see after her speech?
Good afternoon, Innie. I think it would be remiss of me not to mention the biggest breaking story in the UK at the moment, which is Her Majesty's health. I have been speaking about that on Newstrack, but because the announcement, the statement from Buckingham Palace was made during this energy debate, it's only fair just to remind our viewers that Her Majesty is in a serious health condition. We have had statements from Liz Truss, from Lindsay Hoyle, the Speaker of the House of Commons, as well as from Nicola Sturgeon, the Scottish First Minister, Mark Drakeford, the First Minister of Wales, and across the board. There's a really kind of sombre tone in the House of Parliament, and all sides are coming together. The announcement, the energy support package, which has it's now been called, was announced by Liz Truss, the Prime Minister, just a couple of hours ago, and as to be expected, what we've now seen is a freeze. So you'll remember, Innie, we were talking a couple of weeks ago about Ofgem, the energy regulator, deciding that it was going to increase the price cap from what it currently is at just short of £2,000 to £3,500 from the 1st of October. This is, of course, linked to the war in Ukraine and the surge in the energy market. Now, what Liz Truss has announced today is that there will be an energy freeze for households from now until 2024 at £2,500. So your typical household in the UK will not be paying more than £2,500 a year on energy. This is expected to save about £1,000. We know that the former Chancellor of the Exchequer, Rishi Sunak, also offered every household in the UK a £400 rebate. That hasn't been extended, unfortunately, till the end of the year. Now, we did hear before this announcement was made, businesses are crying for some support because, unfortunately for them, they are not covered by an energy price cap that we see within the residential sector. But this support will be extended to them for 6 months. So from the 1st of October, for 6 months, they will be frozen their prices, and it will be reviewed going forward. Now, there are, of course, roaring questions from across the House asking who is going to be paying for this. Will there be a U-turn in Liz Truss's decision not to put a windfall tax on big oil giants such as BP and Shell? In fact, one member referred to the fact that Liz Truss was a senior employee at Shell before she joined politics, which is, they were alluding to the fact that that's why she doesn't want to do that. She will not be reversing that decision. There won't be a windfall. So we're expecting, when there is an announcement on how this will be paid, it will be the taxpayer that has to pay it back within the next few years, perhaps 10 to 20 years. So yes, a really crucial announcement. We know that we're going through a surge in cost of living. 10.1% is inflation at the moment. According to Liz Truss, this will push down inflation by about 5%, bearing in mind the benchmark is at 2%. But just to repeat my opening statement, I think there's a dark cloud across the House, and this story has gone well down the agenda because I don't think anybody in Britain can think of living in this country without the Queen, and that is potentially what we could be shaping up for in the next 24 to 48 hours.
Yeah, Julian, I will be praying with you for the health of the Queen and pray that, she pulls through and we'll see her again. How's the market performing at this time and reacting to all of this, especially the package, the energy package?
Yes, so the FTSE is actually in decent condition. We were talking this morning on Business Morning about the pound, how that's been taking a huge battering. It rose slightly after Liz Truss was announced as PM, but then it fell to about $1.14. The market's doing pretty well. Markets generally in London do well when the pound falls, because we know that most of the FTSE 100 companies sitting on there are internationally focused, so it's good for them. But the all share is up 0.22% at intraday. The FTSE 100 up by 0.26%. The FTSE 250, the domestic market, up by 0.19%. In the currencies market, the British pound is continuing its decline against the dollar. It's down by 0.20%. Down against the euro too by 0.26%. And the British pound is down against the Japanese yen by 0.35% at intraday, Annie.
All right, Juliana, thank you so much for that. And we'll continue to pray with you and pray for the health of the Queen and pray that she recovers. So let's move on to other markets now. Go to Asia, where markets there were mixed following Wall Street's solid rebound rally overnight in the best day since the 10th of August for all three averages. And there we see the numbers right behind me. The Nikkei is in the green, 225. It's up 2.31%. The Shanghai not looking so good, 0.33% down. And so the Hang Seng Index also 1% down, all as intraday. Investors will also be closely watching the Federal Reserve Chair, Jerome Powell's speech, which is supposed to be later on today. Market breeze for another 0.75 basis points hike later, and we do know what that has done in other times. In the United States, stock futures were flat as Wall Street looked to build on its best day in nearly a month. The Dow Jones Industrial Average futures added 25 points, while the futures for the S&P 500 and for the Nasdaq were flat. Dow Jones there, that's the futures, 1.40, S&P 500, 1.83, and the Nasdaq, 2.14. Well, the stock market is coming off a solid rebound during Wednesday's regular trading hours. Meanwhile, traders will be looking ahead, of course, to that speech by the Federal Reserve Chair, Jerome Powell. Well, let's move to some other stories now. Go to Egypt. Let's go to Egypt and see what's going on there. Just before we go on a short break, Egypt's inflation in urban parts of the country accelerated to its fastest level since November 2018 on the back of higher food costs. According to latest report by the state-run statistics agency, the country's consumer prices climbed 14.6% from a year earlier in August versus 13.6% the previous year. At the same time, food and beverages costs, which make up the largest single component of the inflation basket, jumped 23.1% on a monthly basis. Price growth slowed to 0.9% from 1.3% in July. That break comes up now, but after the break, in just a couple of minutes, we'll be back here with more stories. You're watching Business Incorporated on Channels Television. You're welcome back. You're still watching Business Incorporated here on Channels Television. Just before we get to that commodities market conversation, let's look at what's going on in Malawi. Malawi is seeking to raise $50 million to deal with a fuel crisis caused by shortage of foreign exchange. The president told business executives at the investment summit, which they had yesterday, that the nation is working to address the foreign currency shortage, according to a statement seen by journalists. Well, in this year, May, Malawi Central Bank devalued the kwacha by 25% against the dollar and said that it would intervene in the foreign exchange market to support imports of strategic commodities and temporarily reintroduce an order asking exporters to sell 30% of their proceeds. And then from there, we go to South Africa, where the business confidence slipped in the third quarter as sentiment among building contractors deteriorated because of shortages of some materials, load shedding, and planning delays. A survey by the Rand Merchant Bank and compiled by Bureau for Economic Research showed that the business confidence index slipped to 39 points from 42 points in the previous 3 months. Now let's do that conversation with, we have with us Esther Mayowa, joining us from Federal Financial Derivatives Company. Now, hi, Esther, good afternoon. Thank you so much for joining us.
Pleasure to be here.
So you want to talk about sugar today?
Yeah.
Well, I think everybody likes sugar, except for the implication that it brings to your health. You know what I'm saying? So we see that the price of sugar, among other things that we see, everything is surging. It fell by 18.86% to an average of $15.70 in the fourth quarter of last year, from $19.35 in the second quarter of that year. But and we know that we use a lot of sugar in Nigeria. We use it for production, manufacturing of some edibles and all of that. Do you see this fall in the price of sugar helping us to taper inflation, food inflation? Any hope?
Basically, what supported prices, high price in the second quarter of this year was the fact that most of the countries that actually produce sugar started to divert their sugar cane to the production of ethanol, which is also a source of renewable energy. So, and you know why? Because crude oil price actually skyrocketed and supply actually declined. So they had to cover that shortfall with that strategy. And so we saw that supported prices in the second quarter. And crude oil price have actually declined recently. It's trading below $90 per barrel. That will actually support the decline in price.
But we don't know if that decline in crude oil will stay, because we know the threats from Russia, following the threats of a price cap by the European Union. So if that happens and you don't have oil and gas going from Russia to, especially the European country, then it might most likely affect prices and tend it upwards
but
again.
I think the demand concerns are actually outweighing the supply concerns. The fact that interest rates are rising and, it's going to affect people's income. The fact that there will be more savings than more spending, people will want to save them. So people are quite concerned about demand, and the lockdown restrictions that has been reimposed again in China, and so that's people are more. And China is actually the top importer of crude oil, so that's what's supporting that decline in price. Okay. But however, concerning sugar prices in Nigeria, what will be limiting that impact in terms of a fall in the global prices, the fact that we are currently facing currency pressures, dollar shortage.
Like Malawi.
Exactly. It's almost everywhere, because the dollar is really gaining strength over other currencies. And so that's what we're going to be seeing. And the fact that we have less supply, most suppliers will have to go to the parallel market to get their dollars and, use that to import sugar, and so that would actually limit the impact of that decline.
And now that the Federal Reserve is threatening another rate hike,
I tell you,
that would just worsen the whole scenario. But we've been hearing a whole lot about investment in long-term sugar production, backward integration. In not just in Nigeria, in Kenya, some other countries. Is it not yielding results?
Well, like you said, it's a long-term investment, and before we start to see that impact play, it's going to take a little bit time, because a lot of research has to be put in place. You don't just start something at once and you expect large output. So they have to invest in farmers. A lot of farmers have to train farmers as to how they have to go about the production or the plantation, planting sugar canes, and all of these factors and the fact that the prices, domestic sugar prices, are actually not well competitive enough. People still prefer to import sugar, because still, to some extent, I believe the price is lower than what we, so people still prefer to import it. And
is it because that they're not, they don't have confidence in the quality of the locally made one, or is it just sentiment, or is it about the price?
I think sentiment is also supporting it. Probably people just feel the prices are actually low compared to what it is in Nigeria, like what we get in Nigeria. So, and I don't know, in terms of quality too, I think to some extent, I don't know, but I believe that's also supporting
we
it.
have sugar cane,
but so
there
have to be more awareness. I think I heard an advert about, having to encourage citizens to use sugar. Yes. So I think that would also help.
All right.
Improving sentiment.
Esther Maiwa, thank you so much for sharing your perspective with us this afternoon. We appreciate it. All right. So let's move out from there and see rethinking the approach to agriculture transformation. That's one of the focus at the discussions at the ongoing African Green Revolution Forum at Kigali in Rwanda. Remember, we had correspondent Ayola Kasim join us yesterday. Well, for the Director, Agricultural Finance and Rural Infrastructure Development for African Development Bank Group, Asuko Toda, governments in Africa need to ensure that farmers have ready markets as one way to encourage more farmers to boost production. And they should start by connecting off-takers to local farmers.
Also have to ask the off-takers, the buyers, what are the risks that they see? They need to get supply in the quantities, qualities, at the price and at the right timing they need. So if we can actually support these off-takers to be able to locally source production from the farmers will then know that there is a route to market, there is an accessible market, and that connection is very important. And enabling that connection means that a lot of working capital is required into the system. And this is where we think that governments need to prioritize agricultural lending to make sure that companies have the working capital to buy locally from the farmers. And the farmers really need to know that there is a buyer for their produce, because then they will produce much.
Looks like we can't talk enough about food security on the continent, and so the ongoing summit is still focusing on that, connecting off-takers, talking about working capital and agricultural lending. Well, these are some of the issues coming up from that summit, which is ongoing. Of course, we'll have more reports and more information for you because we have our correspondent, Ayola Kasim, still there and feeding us right here. Well, that's where we'll draw the curtains on the program, Business Incorporated, for today. Been an interesting one for today, and we'll do it again tomorrow, starting with Business Morning at 10 a.m. and then at 1:30, I'll be back, Business Incorporated. Enjoy the rest of your day. See you tomorrow, God's grace.